Hi, I'm Jim Gordon for Small Cap Power. Joining us today for a chat is Frank Holmes, the Chief Executive and Chief Investment Officer at U.S. Global Investors, specializing in natural resources and emerging market investing. Frank, welcome to our chat here at Small Cap Power.
Jim, it's great to be with you again.
Frank, I saw you talk recently in an interview, and I found this really interesting because since we last talked, I've been interviewing certain people like yourselves, talking about the economy and finding things that people are putting their money into now. And I heard you talking about you spending a lot of time at Home Depot and how that is a very busy place. And like I was surprised to see that housing sales are up. You were talking about boat sales and Winnebago sales. What do you see out there as people are looking to invest in and buy different things compared to 7-8 months ago?
Well, it really is remarkable. I would never have thought, but when you're stuck at home and you have a lockdown, all of a sudden you start noticing every little crack in your house or this or that, and you want to fix this area better because you're now stuck in this place. And so I went off to Home Depot and it was packed. Would get plants to plant in the backyard of the pool. It just continuously packed. One thing is that all the construction workers were allowed to keep working because they're outside during this virus's lockdown. And all of a sudden you notice Home Depot stock is doing exceptionally well. And I think with the new data mining, and I've been writing about this, is that the quants are 70% of all stock trading, except for just recently, a new phenomenon has taken place with this lockdown. Millennials that were locked up at home, they took those checks, and something like over 70% of the checks that came in the US government went into the stock market. All of a sudden, they became day traders. More money has come in than stock buybacks for the past 4 months. We witnessed in our JETS ETF on the New York Stock Exchange, where it halved in price at the end of February with the lockdown coming, and for 3 months, $1 billion for 70 straight days came into that ETF. Buffett capitulated, got out, and then the ETF jumped 50%. And so you have a brand new audience that Schwab said they opened up 600,000 accounts in March. Robinhood has been the biggest recipient, has opened up millions of accounts. And when you go to Robinhood's website, they're the only one in the toolbar, gold. So you're seeing they're more speculative, they're more informed and educated. A lot of negative news of them, how much money they've lost, but our experience has been they made a lot of money buying our GoAU, also an ETF listed on New York Stock Exchange, and JETS. And you can track how many shareholders are coming in every day into that particular stock. So I think I'm very bullish about junior mining because you're getting new speculation that's coming in, and you have a Robinhood that really is pro-gold. The other thing that's really important for Canadians to recognize is that in the past decade, the mining companies as a whole, the 100 gold producers we follow globally, never had positive free cash flow yield as a whole, except for its change in March of this year. The S&P, which at the end of December had positive free cash flow of a couple of percent, it was evaporated, except for the gold stocks and the Cloroxes and the Costco's and the Home Depots, etc., and the Amazons. You had a big game changer. And now the universe of gold producers have free cash flow. Now you're starting to see them show up in growth newspapers like Investors Business Daily. Franco-Nevada shows up in the Nifty 50 that they have. Kirkland Lake is showing up. So I think that as long as these CEOs do not destroy the revenue per share growth, the cash flow returns, the cash flow growth, then with silly acquisitions, then these stocks can all of a sudden have a brand new run like they had from 2002 to 2007, where they went up 500%.
Frank, I want to circle back on gold. You are known for the 10% golden rule. Can you tell our viewers a little more about that, please?
Well, there's some great math with that. You know, since the year 2000, gold has been up 80% of the time. Year to date, gold has outperformed with a calamity, in particular, the S&P 500. If we go and look at gold as an asset class that the largest hedge fund in the world always talks about is Ray Dalio's Bridgewater, he's $160 billion. He likes gold whenever there's an imbalance between fiscal and monetary policies, and gold has performed well for the 20 years. And the other part is that my Franco-Nevada story I love to tell is for the past decade, they have more than destroyed the performance of Berkshire Hathaway. Warren Buffett doesn't like gold. Well, he doesn't pay a dividend, and in a zero interest rate environment, gold becomes exceptionally attractive. So Frank in Nevada has far outperformed Berkshire Hathaway. And when we take a look at gold since the beginning of 2000, it's up 5 times greater than the S&P 500. So why not have 10%? It's just prudent to have 10% and rebalance once a quarter, rebalance once a year. And what really shocks me are Canadian institutions, which the TSC is about 8% gold related, and they're so underweighted. They're like 1%. So when they finally start seeing more stocks showing free cash flow and bullion, I think you're going to see a huge move into gold stocks.
Frank, always a pleasure to talk to you and get your insights. As I said, it's only been 7 months, but it seems like a lifetime ago with all that's going on in the world. We'll let you out on this one before we let you go. Talk about what you see over the next couple of years. Give our viewers your expertise on your thoughts, say for the next 2 to 3 years.
That's a great question to ask, because innovation, technology, and data collection changes things so rapidly. What you really have to do is to develop the resiliency and the courage to pivot quickly. Like COVID comes along, okay, what stocks are the first thing you want to look for? Companies that are doing well, they're hiring more people. First mover advantage. So Chipotle, out of the restaurant business, had the best mover advantage when it to outsourcing for takeouts. Guess what? They hired 10,000 people. Good performer. Those other in-house diners, disaster. So it's looking from the Home Depots or the Costco's. It's looking for those companies, in addition to gold and gold mining, that are going to pivot quickly when we have these macro forces like the coronavirus come along. I still remain very bullish on the commodity end as PMIs, purchasing manufacturers, have turned positive with China. You can see that China is still 53% of commodity demand. Commodities collapsed when they fell to 35 for that nation. Now they're back over 50. Oil's up, copper's up. So I think that a lot of policies are going to be worldwide to spend more money in infrastructure. The EU raised just close to $1 trillion of spending for green infrastructure spending. So I remain pretty positive about it.
Always a pleasure. He is the Chief Executive and Chief Investment Officer at U.S. Global Investors. He's also the author of The Gold Watcher, Demystifying Gold Investing. Look for him in all types of publications, and he's also the guy behind Frank Talk, the blog. He is Frank Holmes. Frank, I'd always rather do this in person like we did last time, but it's still always great to talk to you, even if it's on Skype. We thank you for your time and for joining us on Small Cap Power.
It's great to be with y'all.
Thank you. And I'm Jim Gordon. Thank you for watching.